Hi everybody, today I'm going to provide you an update of my stocks and unit trust portfolio as end of Q3, and I have also added one new US REITs into the portfolio. I'll share about these US REITs. So this is my US and Singapore stocks portfolio. Currently, you have 12 US counter and 11 Singapore counter total. There is 23 of them. Latest addition is a US REITs, and the portfolio value now is approaching 138,000. The new counter I've added in is VICI, which is a US experimental REITs. This is a breakdown of the 11 Singapore counter. Currently, none of them have a weightage of more than 5%. Where Parkway Life had the highest weightage due to its price appreciation, and the one that the lowest weightage is SGX, which is 1.66, followed by Fraser Centrepoint and ST Engineering. With these three counters are currently less than 2%. For the US counter, Nike currently have the highest weightage due to its price movement and is approaching 5% holding. And the one that have the lowest holding is the one that I've just added in, VG Property, which have 1.71%. And I still have a cash balance of 27.64% for me to further deploy into the market. This is the portfolio performance since inception in January 2022, and since October last year, the gap between the capital invested and the portfolio value have been widened, and I hope that this will continue to do so towards the Q4 of this year. Similarly, the dividend collected have been steadily increasing, and now we have more than 3,000, and the member of the dividend collected is actually this year 2024, because of the portfolio value have increased and more dividend paying stocks have been invested. Now let's move on to my unit trust portfolio. There is no changes for the unit trust portfolio for the month of September. However, I plan to make changes for the unit trust portfolio due to Threadneedle Global Technology Fund have been de-recognized in Singapore. What does that mean? Means that retail investors are not allowed to further invest into this unit trust. Thus, I cannot do a RSP or money investment into this fund. So I need to make changes to these technology stocks. I'll update everyone again in my next update on this. The unit trust portfolio have a similar trend as the stock portfolio since October 2023, and the profit and the capital have also steadily have widened, and hope that this will continue to do so towards Q4 of the year. Let me share about the new counter that I've added in. It is called VG Properties. It's an experimental REITs, which is a pretty unique REITs that you can't find that in Singapore context. It specializes on gaming, hospitality, and entertainment destination, and it currently have 93 experimental assets, where 54 of them are gaming. Actually, in short, you can call them casino, and 39 non-experimental properties. And these REITs are US focused, where majority of the property are located in the United States with a minority in Canada. These REITs have IPO since 2018 and have been steadily growing over the years by acquiring more and more properties. As when I were to invest in REITs, I don't like to invest in REITs that have just IPO. I need to look at the track record, make sure the REITs have performed well. And usually the timeline given to a REIT before I consider to invest them is 5 years. And these REITs have passed the 5-year mark, and this REIT have passed the 5-year mark. Thus, I feel that it's an opportunity to build a position on it, as the Fed has started to cut interest rate, which is positive for REITs over the long run. What is unique about this REITs is that it is 100% triple net lease properties. What does triple net lease means for those that are new to REITs is that the REITs do not need to pay for the property taxes, no need to take care of the property maintenance. Everything will be handled by the tenant. Put in layman terms is that I just buy a property and I rent it out, and I don't need to care about the taxes, maintenance, utility bill, all this. All this the tenant will take care of it. I only need to care about they pay me rental every month. So this is what I like about triple net lease. And when it comes to Singapore context, the REITs that have a triple net lease are the healthcare REITs like Parkway Life REITs. However, do take note that more than 70% of their rental collected are mainly from two big main tenants, Caesar and an MGM Resort. Although I'm not so comfortable with such a high concentration risk, then maybe it may give this risk a miss. But for me, I look at this is that these two are mainly on the casino player, and this REIT is focusing on casinos. That's a risk that we need to take. But however, I look at the portfolio as a whole, this REIT only occupied currently less than 2% of my total portfolio, and I will cap it at maximum 5%. To me, that I think that this risk is manageable compared to the growth potential. One thing I like about this REIT, and I want to special highlight about this REIT, is that at 2020, we know that there is a COVID period where REITs suffer a lot and interest rates are having rising, and some of the REITs have actually run into issue and not able to pay dividends, and a lot of REITs have to cut dividends. But for VICI properties, they have 100% collection in their rental. There is zero default, and they managed to collect 100% of their rental from all the tenants during the 2020 period. And next thing I like about this REIT is that you look at the remaining lease term, it is 41 years. So it have a very, very long lease term, and a lot of tenants are signed for a very, very long lease term on this REIT. And thus, compared to the other triple net lease, which have only about lease term of 8 to 14 years. The next thing unique about this REIT is currently for end of 2024, 40% of their rent have the CPI protection. So regardless of inflation, the rent will just increase based on CPI rate. And by 2035, 90% of their property all will come with a CPI protection inside. This will make sure that the rent will sort of guarantee increase when inflation continue to grow. And since this REIT had IPO in 2018, the dividend per share have been growing at the 7% CAGR, where the compounded annual dividend growth rate is at 7% compared to the other REITs in the market. I talk about US REITs itself, where I have this counter O, royalty income, where it only have a compounded annual dividend rate of 3%. Where this REIT have a 7%, were they able to maintain the 7% compounded annual dividend growth rate? That will be anyone's guesses, but if you were to drop, let's say maybe to 4%, it is still pretty decent. When you look at the REITs in Singapore aspect, how many of the REITs in Singapore can give you at least a minimum of 4% annual dividend compounded growth? These are the location of the REITs across the United States and also one under Canada. But as I mentioned, 47% of the property are located in Las Vegas. And thus, this play a crucial part that you must believe that Las Vegas will continue to be the key gaming place, and there's people want to go there. On top of that, they have actually, these are the multiple revenue stream where they got hotel room, they got gaming space, they got meeting and convention place, they got 500 plus F&B outlet, they got entertainment venue where they have 4 golf courses, and they have 500 over retail outlets. And this is where they got 10 trophy assets among the Las Vegas Strip. And Las Vegas have been growing over the years and still have been the center of attraction for entertainment, where finally they have the F1 racing site. And even at 2024, they have the NFL Super Bowl hold there. So going forward for the next few years, I feel that Las Vegas will still be the key part for people looking for gaming and entertainment. On top of that, the REITs actually have also started to expand further and start to grow further. And due to their nature, they are called experimental real estate. They are called the experimental REITs. They actually went to other places, like for example, they acquired 38 Bowling Entertainment Center. They have acquired Chelsea Pier. So these are something that we don't see in Singapore context. And we don't see this type of REITs available in Singapore. This is one of the reasons I decided to add this REIT into the portfolio as a form of diversification from the core REITs that I have. And another reason is size really matters when it comes to REITs investment. And VICI properties, although it's only slightly more than 5 over years old, in terms of market capitalization, they are the top 10 REITs in the US, where US have more than 100 over REITs listed in US, and they are able to be in the top 10. It is an achievement the REITs have actually achieved since IPO to today, where you can see that the top REITs, the famous like Prologis, American Tower, Equinix, all these are the household name REITs, where VICI property actually rank among the 9 to 10 position under the market capitalization for the US REITs. Another thing about this is that more than 98% of the shares is held by the institutional. This indirectly shows that institutional have a very strong interest, or sometimes you can say that a strong confidence in the REITs. And the top two holders of the REITs are Vanguard and BlackRock, where both of them have make up slightly less than 25% of the total holding for the REITs. Now look at the performance of these REITs. Does it really perform well in the past? So let's look at the year-to-date performance for these REITs. I plot it against the S&P 500 ETF, SPY, and I also plot it against the sector ETF, the US sector REITs ETF is called the XLER, and I also plot it based on the Singapore REITs Index, IH Singapore REITs Index total return. So for year-to-date, the REITs have delivered about 6% total return. It is slightly better than the Singapore REIT Index, but actually lose to the sector ETF, where it itself is one of the key counter inside, and also lose to S&P 500, where VICI Property is also one of the S&P 500 component stocks. But we look at a longer timeline, 5 years, that's over the COVID period, where we can see this is the COVID period. How does this REIT perform? This REIT have actually outperformed the sector ETF, which is the XLER, by more than double, where XLRE only performed 30%, it delivered 87% return. Of course, when compared to Singapore REITs itself, Singapore REITs Index, it really trashed the Singapore REITs Index performance. However, it still lose to S&P 500, which have 110% return, mainly driven by the tech stocks. But you have to put it further on this REIT, since it IPO until to date, which is at 2018, the REITs performance is on par with S&P 500. So that is something a bit unique for a REIT, and especially this REIT have been through COVID, been through an interest rate rising situation, and now interest rate just started to cut. Its performance is as good as an S&P 500. We have grown over the year mainly due to the tech, and this REIT able to match the S&P 500 performance. It's quite a very good performance for these REITs, and they are able to bounce up very strongly over the past few years. And currently with a dividend yield of more than 5%, even after you take a 30% withholding haircut off, you still got about 3% dividend yield. But a lot of people will say that compared to Singapore REITs, the dividend yield is much lower. Yes, but do think now that this REIT have a track record of compounded dividend growth of 7% per year. And let's assume that you can only grow 4% per year going forward in the future. And you're able to match with a lot of Singapore REITs dividend yield over long term. And do take note that when the REITs dividend able to grow at a positive rate, you see the share price will also move up together. And thus when we talk about dividend investing or income investing, we always want to look at the total return of the counter. What does total return mean? We have our dividend keep on increasing, but we also have the share price keep on increasing. This is what we will want to achieve when it comes to dividend investing, rather than getting dividends, but our share price keep on dropping and the dividend is not even able to cover the capital loss. That's all I have to share with you today. And you feel that if this video has benefited you, do remember to like, share, and leave your comment below. I shall see you in my next video. Bye-bye.